What would a policy mistake from the Fed actually look like? Would it be, lowering too much stimulus, or would it be raising too soon?
I think ideally the Fed should lower 50 basis points on July 31st. And the reason I think this, I think it needs to get ahead of the market a little bit. So the market has been very clear, signaling to the Fed that the December raise was a mistake, and that conditions tightened too much, and that they have to undo it. But the Fed didn't say they're going to undo it. They've talked about lower inflation expectations and trying to anchor inflation in a way that we don't get into this trap that Japan has. I think if the Fed lowered 50 basis points, which I do not think they will do, but if they did that, they'd get ahead of the market. They would straighten out the curve, would get rid of the inversion, and we'd have healthier markets. I think that's actually the ideal situation.
What does dollar do from here until the end of the year?
Can you repeat the question?
What does the U.S. dollar do from here until December?
Sure, there's definitely a floor under the dollar here because we are the best economy right now. As we saw from the IMF yesterday, the U.S. growth rate is probably increasing while the rest of the world is decreasing, driven by lower growth rates in emerging markets. Even though the Fed is going to ease, that it will keep a floor under the dollar. But ultimately, we do think that if Europe only lowers its rates by 10 basis points and the Fed does 50 by the end of the year, probably the dollar gets weakened towards the end of the year.